There's a new stock in town. A lot of us have been feeling the burn with high growth stocks and SPACs. I know I have. It seems like there isn't an opportunity anywhere in high growth stocks. Just last week we had a new IPO hit the market. This is just not an ordinary IPO. This stock has a perfect storm of great high growth opportunity. It's currently trading around $30. I sent an alert on Discord last week when the stock was trading at $24. They have clients like Dwayne Johnson, Halle Berry, Matthew McConaughey, Steven Spielberg, Adele, Lizzo, and Carly Kloss. It was just recently announced that Elon Musk joined the board of directors of this company, and this company will release some NFTs later this year. The company has been around since 2009, but the talent agency aspect of the business has been around since 1898 and has signed on many major entertainers. A few worth noting are Charlie Chaplin, Marilyn Monroe, and Elvis Presley. The current market cap is $20 billion and is trading at a PE ratio of 25. Good yearly revenue, $1 billion cash on hand, and it pays a 5% dividend. This company came out here guns blazing with good financial numbers, having great clients, Elon Musk joining the action, and lastly, paying some great dividends. This entertainment company is extremely ambitious and is looking to capitalize on the reopening trade. There's a lot to unpack in this video. If you are invested or thinking of investing into high growth stocks, you don't want to miss this. If you enjoyed this video, make sure to like, subscribe, and hit the bell to get notified for my latest videos. If you want to get 2 free stocks, try Webull. Get 2 free stocks when you deposit $100 or more. To get the most up-to-date high growth stock news, my latest buy and sell alerts, and smart money market sentiment, check out my Patreon. It comes with private Discord and a full range of server benefits. All the links will be below under the description of this video. Let's start off with the IPO information. The company I'm talking about is Endeavor Group IPO. 19 things for potential EDR stock investors to know about the entertainment company. Before we go further, Endeavor Group Holdings Inc. operates as an intellectual property, content, event, and experiences company. The firm operates through the owned sports properties, events, experiences, and rights, and representation segments. The owned sports property segment is comprised of a unique portfolio of scarce sports properties, including UFC, PBR, and EuroLeague, that generate significant growth through innovation rights deals and exclusive live events. The events, experiences, and rights segment owns and operates many events, including the Miami Open, HSBC Champions, Fry's Art Fair, New York Fashion Week, and Hyde Park Winter Wonderland. The representation segment provides services to talent and corporate clients and includes content division, Endeavor Content. The company was founded in January 2019 and is headquartered in Beverly Hills, California. Now let's go back to the article. The company was listed on the New York Stock Exchange on April 29th under the EDR ticker. This will have it offering up to 21.3 million shares of common stock. There's also a 30-day option for underwriters of the IPO to purchase an additional 3.1 million shares at the initial price. The stock IPO'd at $28.47 per share. When the offering is complete, Endeavor Group will have 5 different types of common stock. That includes Class A common stock, Class B common stock, Class C common stock, Class X common stock, and Class Y common stock. Class A and Class X will have 1 vote per share. Class Y will be worth 20 votes per share. Class B and Class C stocks will be non-voting shares. A majority of shares will be held by several executives at the company. That includes CEO Ariel Emanuel, Executive Chairman Patrick Whitesell, as well as their affiliates. Endeavor Group was formerly known as William Morris Endeavor Entertainment. It's a holding company for talent and media agencies. The company's main office building is located in Beverly Hills, California. It has also been expanding to introduce additional forms of businesses. That includes a sports betting business that was launched in 2018. Let's take a look at what the CEO had to say on IPO day.
Ari Emanuel, welcome and good morning to you. What a journey it has been. You guys pulled your IPO back in 2019, been through a pandemic. The business has transformed since then. What do you call Endeavor now? What was your pitch to Wall Street?
Well, listen, we listened to Wall Street. First of all, thank you for having me. We listened to Wall Street. We resegmented. I think there was confusion around the UFC. We've consolidated all of the UFC inside the company. And we're the kind of the reopening story like you see now with HBO Max, Comcast you're just talking about. We're the largest company and the only company that represents content in the entertainment space, owns content in the entertainment space, owns sports with the UFC and many others, and represent it. There's nobody like us in the world. And I think we're the reopening, plus we have all the experiences, the largest experience company. So we're a unique company in the marketplace right now and perfectly primed for where the reopening is going.
Right, and not just a reopening play, because your acquisition of the UFC and what you've done there has been successful even amid the pandemic. Talk about that business a little bit. Currently, sports property made up about 20% of revenues in 2019. How do you see that shifting or changing over the last year and over the next few years?
Well, here's what I would say to you. Even during the pandemic, where we didn't have live audiences, we didn't have commercial pay-per-views, we beat our EBITDA number by 10%. Now with the reopening you just saw last weekend, we had live audience for the first time in Houston. We're going to have a live audience. In July, we're having another live audience. Our direct-to-consumer business on Fight Pass is up 40%. Our commercial numbers and our marketing numbers are up. China is going to be bigger than ever. Actually, because of the fight, even though our Chinese champion lost, Lina, there was over 1 billion video views out of China. We think that business is going to be as big as the U.S. market. We just made a new deal with Meigu. So all signs point very higher. And, we're coming out in June with our NFTs like the NBA has done. Our NFTs for the UFC are coming out. So we're in unbelievable shape in that business right now.
We spoke the other day to the CEO of Dapper Labs, who's quite excited about that. Ari, any other public company, though, from Boeing to Tesla to drug makers, when there has been a death or a significant injury tied to the product, that often affects the stock. Now, there's no denying the UFC is violent, and there's always been this question, what if something, God forbid, truly horrific happens? Do you have a plan if that happens and you're a public company? How are you thinking about it?
Well, I would say, the UFC, people don't realize, has been around for 26 years. Unlike any other sport, we've never had really a really serious injury. I mean, sports have serious injury, whether it be hockey, the NFL, basketball. We all take our precautions in that. People understand it going in. I'm not really concerned about that. We do have plans in place, but we have a lot of kind of protections inside the arena about tapping out and et cetera. But we're like any other sport, whether it be football, hockey, any of these sports, that have to be concerned about that. And it's been around for 26 years. Nothing's really happened in that capacity. So I think we're in a good shape there.
All right, for you personally, you are becoming a public company CEO, and America sort of knows your trajectory, your style. How does that change once you're a public company CEO, or does it not? Do you take a page from one of your directors' books, Elon Musk, and sort of do you as you have done?
Well, I'm going to be me. I have grown up over the last 26 years running the company from 4 people to where we're at right now. I think we're the best positioned company for where the world is going in entertainment, whether it be content in all forms. Distribution is expanding, as Comcast right now just reported last week. HBO and AT&T reported, and their subscriptions. I'll be, who I am, but everybody around me is making sure that I'm in line. It's going to be hard for them.
So no cursing on the earnings call. Is that
I'm definitely not going to do it with you, my first interview. But, so this will be one of one, maybe.
Yeah. Okay, good. Speaking of Elon Musk, he will be one of 11 directors, but he is a busy man. He is CEO of 2 companies. He has active roles at Neuralink and the Boring Company. What do you want to get out of him?
Well, listen, one of the great things in my 15-year relationship with Elon is he always kind of sets the stage of where the world's going. He's been an entrepreneur, so he understands what it takes to be an entrepreneur and how to develop businesses and grow them and the force you have to bring to them. But he also gives us insight in where the world is going, so therefore we can adapt our company. And that's really what I want from him.
This stock was supposed to IPO a year ago, but they listened to Wall Street and held off. Smart move. Now the storm has passed. They IPO perfectly to position themselves to intrigue investors at the best possible time. I think they did a phenomenal job. They also added Elon Musk to the board of directors for his outlook and perspective. On April 29th, after the market closed, this article was released. Elon Musk joins the board of Endeavor, owner of the UFC. Elon Musk has formally joined the board of Endeavor, the Hollywood conglomerate whose properties include the William Morris Talent Agency and Ultimate Fighting Championship, in conjunction with Endeavor's IPO on Thursday. This is currently Musk's sole directorship for a company that he didn't help create. That's big news. Patrick Whitesell, Endeavor's co-founder and executive chairman, said that Musk's advice and perspective is invaluable, while they wrap reports that the Tesla CEO helped Endeavor secure new investors. Whitesell also said, Elon's personality, but we like personalities, and so we're comfortable with it. Being in the entertainment business, we've dealt with personalities. Whether we represent them, we have a few that we work with. So I guess we got a lot of experience in that area. So we're just thrilled to have him. Now let's take a look at some numbers. The ticker symbol is EDR, Endeavor Content. It's currently trading in the low 30s. Since its IPO on April 29th, the stock has traded between $23.25 and $32.45. It has a market cap of $20 billion, trading at a PE ratio of 25, and it gives a 5% dividend. That is a very good dividend in today's markets. Their financial performance is good, with a slight decrease last year due to the pandemic, but still generating great revenue. The current net profit margins are negative, but they have $1 billion cash on hand, with a world of possibilities if this pandemic problem gets settled. Overall, this looks like a needle in a haystack type of opportunity during these market conditions. This stock looks great.